Good day, Junior Techies. I'm Mrs. Brimacombe. In Chapter 3, we are going to focus now on partnerships. This is a new form of ownership. Grade 10, the focus was on a sole trader. So when we're looking at Activity 1, our focus is going to be on the general ledger account. So before we start with the activity, we are just going to go through some basics. In a partnerships, partners are entitled to a primary distribution of profits and final distributions or secondary distributions of profits. Why is this? We've got different types of partners, meaning some partners are actively involved in the business and other partners could be silent partners. So to make the distributions of profits fair, we say that the partner is entitled for primary distributions, which is my salary allowance, bonus, and interest on capital. When we look at the salary allowance, this is always equal to 12 months. So what happens now? Salary, bonus, and interest on capital is an expense to the business. This will be debited and account credited the current account of each partner. Each partner will have their own account. So you would always have in the current account the primary distributions of profits on the credit side. Now, at the end of the accounting period, my expense account doesn't form part of the operating expenses. It forms part of the distributions of profits, is closed off to the appropriation account. When we do the closing transfer, it means that salary, bonus, and interest on capital will be credited, account debited, the appropriation account. In a partnership, drawings is closed off to the current account to show how much has the partner taken from the business. When we're now looking at our final or remaining distributions of profits, we have to take the net profit, which we calculated in the profit and loss account, and we have to subtract all our primary distributions of profits. The remaining is divided into a specific ratio, and that is taken to the current account. Please be aware that it could happen that the remaining is a loss. We share the profits and we share the losses in a partnership. So if that happens, it means that figure will appear on the credit side in my appropriation account. For every credit, there is a debit. So if we now look at our current account, which each partner will have, the credit side will display what a partner is entitled to, and on the debit side, what the partner has taken from the business. So this means that my current account, when I balance it, can either have a credit balance at the end of the accounting period, or it can have a debit balance. Please refer to your theory booklet for more details on this. So a credit balance means that it's an owner's equity account plus the partner has not taken what he is entitled to, or he had balance from the previous year. It means that the business, the partnership owes the partner his interest as a positive balance. But when it has a debit balance, it means negative. He has taken too much. This means owner's equity minus on the debit side, debit balance. Looking now at the activity. The following information was extracted from the accounting records of Marble Distributors, a partnership owned by M. Spiderman and why 4. Required. Compare the sole trader and a partnership in terms of the unique accounts. Use the information below to show the influence on the accounting equation for the year-end adjustments, and then use the information given below to draw up the following accounts for the year ended 28 February 2022. So this means our accounting period ends 28 February 2022, which means it starts the 1st of March 2021. Make sure that you familiarize yourself with the information which is provided. Completing question 1. Compare the sole trader with the partnership. So if we look at equity accounts, in a sole trader, we've got 2 equity accounts, which is my capital and drawings. But in a partnership, we have capital account, drawings, and the current account. So this is the difference between a sole trader and a partnership. If we look at the net profit, in a sole trader, the net profit is transferred from the profit and loss account to the capital account. But in a partnership, our net profit goes to the appropriation account to show how are we going to distribute the profits. So looking at the appropriation of profits, it's not applicable to a sole trader because all the profits, the owner is entitled to that. But in a partnership, it must be shared according to the partnership agreement. Question 2. Accounting equation on year-end adjustment. Spider-Man, a partner, had taken trading stock at a selling price worth 1,500 for his own use on 28 February 2022. The business uses a markup of 100% on cost. The entry has not yet been recorded. If a owner takes trading stock for personal use, this is always at cost and not at selling price. This means we first need to calculate what is the cost. To calculate the cost, we have to say times 100 divided by 200. To show the influence or the effect on the accounting equation, account debited drawings, make sure that you write the name of the partner. Account credited trading stock amount 750, and this will decrease your assets and decrease the owner's equity. Effect on the liabilities, 0. Adjustment number 2. 4. A partner took stationery worth 480 for his own use on 28 February 2022. The entry has not yet been recorded. Account debited drawings, and make sure you write the name of the partner. Account credited stationery amount 480, assets 0, owner's equity plus minus. Liabilities, nothing. Adjustment number 3. M Spider-Man increased its capital by 50,000 by contributing additional equipment on 31 August. The entry has not yet been recorded. Again, important for when we're doing general ledger. For accounting equation, account debited, equipment, account credited, capital, Spider-Man. Each partner has its own account. Amount 50,000, assets plus, owner's equity plus, liabilities 0. Adjustment 4. 4 decreased his capital by 50,000 on the 1st of February 2022. The entry was recorded on 28 February 2022. Account debited is going to be capital. This has nothing to do with drawings. The partner decided to decrease his capital. Amount 50,000, assets minus, owner's equity minus, liabilities 0. So again, we have account debit capital, account credit bank. Why capital? Because he decreased his interest in the business by taking capital. If we look at question 5, the partnership agreement made provision for the following. Partners were entitled to the following monthly salaries. Spider-Man 15,000 for 12,000. Now, first thing which is important, this is monthly salary. When the owner takes his monthly salary, drawings is debited, bank is credited. But at the end of the accounting, we need to show the salary allowance. What were they entitled to over 12 months? So now I can't just go ahead and say 15,000 times 12 and 12,000 times 12. Why? According to the partnership agreement, the partners increased their salaries by 8% on the 1st of July 2021, which means there's a calculation involved. If we look at our accounting period, it ends 28 February 22, which means it starts the 1st of March 2021. So if this was increased on the 1st of July 2021, it means for 4 months it was at 100%, and for 8 months it was at 100 plus 8%. So to calculate Spider-Man, you're going to take for 4 months times 15,000, and then for 8 months, we're going to say 15,000 times 108 divided by 100. This equals the total salary allowance. If we look at 4, again, we're going to first look at the monthly salary times 4, and then for 8 months, it will be 12,000 times 108 divided by 100. So the total salary for 4 is 151,680. So account debited, the salary of each partner. Each one has their own account. Why is it debited? This is an expense. Account credited, current account, Spider-Man, current account 4. This will increase their interest on their owner's equity. Because salary is an expense, that will also decrease the owner's equity. Number B, Spider-Man was granted an annual bonus of 30,000 for working during the December holidays. It's not a must that both partners must get a bonus. It all goes about what is in the partnership agreement, which could be done verbally or written. Of course, it's much better to have a written agreement. To show the bonus, account debited, bonus, partner's name must be written, account credited, current account with the partner's name, Spider-Man. Each partner has their own account. Amount 30,000, owner's equity plus minus, nothing assets, nothing with liabilities. Partners are entitled to interest on capital at 12% per annum. Interest is always calculated on the capital balances. This means we now need to go back and look at what happened with the capital. From the pre-adjustment trial balance, both partners or Spider-Man has a balance of 280,000 and 260,000. But both partners during the year decided to increase and the other partner decided to decrease their capital. So this is what we said earlier for the general ledger purpose as well and for interest on capital. It's important to know, has this entry been recorded or has it not yet been recorded? So if we look at Spider-Man, Spider-Man increased his capital by 50,000 on 31 August. So it means for 6 months, his interest must be calculated on a balance, and for 6 months it must be calculated on another balance. But what are those balances? The entry has not yet been recorded. It means that the balance from the pre-adjustment trial balance will then be the balance in the beginning. So we take 280,000 times 12% times 6 divided by 12. Then we need to add that 50,000. So from the 31st of August, his balance is 350,000 times 12% times 6 divided by 12. To calculate 4 decreased his capital by 50,000 on the 1st of February 2022. The entry was recorded on 28 February 2022. This means that the balance from the pre-adjustment trial balance is the balance at the end, and we need to work out the balance in the beginning. To work out his balance, we have to take 290,000 times 12% times 11 over 12, and then 260,000 times 12% times 1 over 12. Very important. He decreased his capital. This means that his balance in the beginning of the accounting period is more. So now take note of the account debited. In a partnership, we don't have interest on capital partner A, interest on capital partner B. We have one interest on capital account. Account credited, current account Spider-Man, and current account 4. Effect on the accounting equation for both, my owner's equity is plus minus, assets 0, liabilities 0. There are other ways to calculate the interest on capital as well. I always say as long as we get to the same destination, it doesn't matter how we get there, as long as we get the same answer. To complete the general ledger account, if we look at capital, drawings, always start with the movement, especially when we're doing year-end adjustments, because you don't know, have the transaction, has it been recorded or not? So then the balances from the pre-adjustment trial balance, should it be the balance in the beginning or should it be the balance at the end? So if we now, again, we've spoken about this earlier, but if we now look at Spider-Man and we start with the movement, there was additional equipment contributed. Because this has been recorded, the balance from the pre-adjustment trial balance, because it has not yet been recorded, the balance from the pre-adjustment is the balance in the beginning, and you have to calculate the end balance. With 4, there was capital taken, it was decreased. This is why capital was debited. And again, they said to us the entry was recorded on 28 February. This means the balance from the pre-adjustment is the balance at the end. And we need to work our way back, as illustrated when we calculated the interest on capital. If we look at drawings, the partner, Spider-Man, took trading stock. Then 4 took stationery. So there's the balances from the pre-adjustment trial balance. If I look at Spider-Man, it has not yet been recorded and the same as with 4. This means that the balances from the pre-adjustment is the balances in the beginning of the accounting period, which is the 1st of March 2021. The trading stock will be debited in the drawings account. Stationery will be debited in the drawings account. At the end of the accounting period, this is closed off to their current account. To show the year-end adjustments with regards to the primary distributions of profits, which is salary, bonus, and interest on capital. You can use the accounting equation which you've completed when you identify the account debited and credited and what's the amount to complete the general ledger. A reminder, salary, bonus, and interest on capital is an expense account which will be debited. The rest, current account, will be credited. When did this happen? On 28th February 2022. If we look at the current account, at the end of last year, which is the opening balance this year, the current account of Spider-Man had a credit balance, so its balance brought down 5,000. 4 had a debit balance 3,000, so on the debit side 3,000. If you remember our earlier slide, drawings, where did we close drawings off to? The current account, which means drawings would have been credited, the current account would be debited. All my expense accounts doesn't form part of the operating expenses, it forms part of the distributions of profits. So where do we close it off to? The appropriation account. For every credit, there is a debit. Now, our next step in the appropriation account. Our net profit would be calculated in our profit and loss account. So in my appropriation on the credit side, we will have from the profit and loss account, the net profit for this year was 550,000. To calculate now my final distributions of profits, we have to take the net profit minus the total primary distributions of profits. What does it consist out of? Salary, bonus, interest on capital. Primary equals 442,380. So now we need to take the net profit, 550,000, minus the primary. The remaining will be shared equally between the partners, and that's why we divide it by 2. Where do we take the final distributions of profits? To their current account. If you look at the appropriation account, there's no total carried down, brought forward, any of that. This is closed off. If you take the debit side, it must equal the credit side. In my current account, I will now have on the credit side the final distributions of profits. Once we now have indicated what the primary distributions of profits are for each partner, what have they actually taken from the business, we can calculate our end balances. So if we start with Spider-Man, you can clearly see that the credit side is more than the debit side. So if we add the credit side and we subtract the debit side, this partner has a balance brought down of 85,260 on the credit side. If we look at 4, the credit side is more than the debit side. This means he went from a debit balance and has now a credit balance. Thank you very much. I hope that you've learned a lot in this video with regards to partnerships. How do we deal with year-end adjustments and how do we show it in our general ledger account and then looking at the closing transfers. I want to leave you with this quote: you are capable more than what you know. In our next activity, in activity 2, we're going to look more at completing the general ledger accounts. Have a wonderful day.